Hello investors, welcome to the channel. For today's video, I'm going to be going over strike prices and the criteria that is used in order for you to choose the best strike price. And I'm going to show you how the best strike prices can allow you to make those big bucks. Now, if you're new to options trading or you're trying to use options in order for you to supplement your regular 9 to 5, then this is definitely the right video for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be going through the different criterias that goes into play before choosing strike prices and how the correct strike price would put you a cut above the rest. Now, for today's video, we're going to be using none other than AMD. Now, despite what anyone has told you, there's only one sure way to learn options, and that is to practice, practice, practice. That being said, let's go ahead and get down and dirty with options. So we're going to go ahead to trade AMD options to the bottom in order for us to open up our option chain. Now, the option chain is this area down here that gives us enough information in order for us to make an informed decision. Now, when deciding on your strike price that you want to choose, several criteria goes into it. It's going to depend on the strategy you choose, the strike date you choose, the option premium you want to receive, also the share price goes into it, but most importantly, your average cost. Now, we're going to be going through one example of one strategy, and it's pretty much the same for almost every single strategy. So let's go ahead now and we're going to do a sell put for this example. Now we're going to be going out and we're going to be choosing our strike date. Actually, let's leave this strike date right here. And that's February 14th. And I could go ahead and show you the strike prices. So here's the strike price right now of 115. And as you can see here, the price is 345 for the February 14th. Now we're going to go ahead and choose the strike price I want to use for this video, which is going to be February 21st. And we're going to use the exact same strike price, which is 115. Now you see the exact same strike price, but now your premium is almost $100 more. So your strike date is one of those important factors that helps you to determine the right strike price. Now, the stock is also going to help you determine the right strike price. Now, I've been trading AMD for a very long time now. So with AMD, I've decided to do some bi-weeklies or some monthly options. I'm going to get into my options tracker to show you how I choose my strike prices for AMD. What this allows me to do by going out monthly or bi-weekly, it allows me to get more consistent income. Now, another thing that's going to be a determinant factor in order for you to choose your strike price is going to be your share price. If you wanted to do a sell put on AMD right now and the share price is trading at $111 and you were to choose your strike price, well, first of all, you're going to choose your strike price below the share price because of the nature of this option strategy. This option strategy is a bullish option strategy. So by doing this option strategy, you're of the mindset that AMD is going to continue to rise. So why are you doing a sell put? The reason why you're going to do a sell put is that you think AMD is a good stock to have in your portfolio. So in case you're wrong about the direction the share price is going to take, and this market gives you a reversal, then it's a stock you don't mind owning in your portfolio. So we're going to go ahead and we're going to choose the 110 strike price. Now with the 110 strike price, if you were to do this option strategy, you're going to be receiving a premium of $157. The reason why we got $157 is because 1.57 multiplied by 100 shares. Each option contract is multiplied by 100 shares. Now, if you were to decide to say, I'm not going to take the 110 strike price, it is way too close to the share price, I'm going to be a bit more conservative and I'm going to go with the $109 strike price. Now, because you choose the $109 strike price, you have traded down on risk, meaning it's a lot harder for the stock to get to 109 as opposed to 110. However, you also traded down on your option premium. With the 109 strike price, instead of getting $157, you're going to be getting $1.23. So another criteria that hinders your strike price is going to be your goal for your overall portfolio. So if your goal is to make 1% consistently with this option strategy on AMD, then your 1% premium is going to be 1.23. So then you know the strike price you need to choose is going to be $109. Now, if you guys are following right now, let me know. If not, any questions you have about choosing your right strike price, let me know in the description below. Now, one of the most important criteria for choosing your strike price is going to be what's known as your average cost. Your average cost is the total price you paid per share to own the stocks in your portfolio. So, for instance, let's go ahead and let's switch over the strategy to a sell call. Now, with a sell call, if I were to buy 100 shares of AMD right now, it would cost me around $11,172. Now, if I decided to use that 100 shares in my portfolio in order to do the covered call option strategy, which is a sell call, and I'm going to choose the $115 strike price. Now, if I do go ahead and choose $115 strike price, this is showing me that I'm making a mistake. And you can see that by the break even right here. Robinhood is telling you that in order for you to break even with this option strategy, you need to choose a strike price of 116 and above. Now, that is not entirely correct. So in my portfolio, however, I'm able to control 200 shares of AMD at a much less cost. Let's go ahead and jump into my options dashboard, and we're going to jump right back into Robinhood. So as you can see here, I'm able to trade 2 contracts on AMD, and my average cost for those 200 shares is $51.50. If we go back to Robinhood right now, if I were to just buy 100 shares, it's going to cost me $11,000. So 200 shares that I'm able to control in my options dashboard right now would cost me $20,000. So I chose that strike price. Now, the reason I chose that strike price has to do with the option strategy I use. I did mention option strategy has a lot to do with your strike prices. Let's say the average cost to own AMD in my portfolio is $100. Then this break even no longer matters, no matter what the share price is. By selling the strike price of 115, I'll be way above my break even. So always keep that in mind as well. Now, that's pretty much it for choosing your strike price. In summary, your strike price is a personal decision. It's a personal decision because it's going to be dependent on several different criteria. A few of those criteria are going to be your strike date, your goal for your portfolio, the strategy you're using, the share price, and most importantly, in my portfolio, your average cost. All these criteria are going to be based on your trading method. So remember, before getting into any option strategy, have an exit strategy and always do your own due diligence before investing. Now, if you found any value in this video, go ahead and like the video, subscribe to the channel. And if there's anyone out there struggling to grow a small portfolio, well, that's what we specialize in. Feel free to share this video with them. And until the next video, keep pushing your investments.